Hello, welcome to today's podcast. My name is Nilesh from ATZ Finance, and I'm lucky and privileged to have my good friend Joe from Libra Utility with us today. Today, we're going to cover a few topics, some controversial, some not so controversial, just to get insight on his industry and how they work. Over to you, Joe.
Obviously Joe Lawrence, Managing Director of Libra Utility Services, specialising in all water, wastewater, drainage, groundworks and water hygiene.
Awesome. What made you get into that sector?
I spent a lot of time previously at a family business, something that I chose to do straight from school. Not really interested in the academic structure, didn't really bother me. University wasn't on my to-do list. Lucky enough to be born into it to a certain extent, and naturally, just as my career progressed, I took the leap of faith in 2023 and joined a good friend of mine to sort of start a project on our own.
Yes, I remember I used to work with your father many years ago. I think we've been working together for over 15 years and various other businesses to go with it. And your father's built up a massive business at the time when you were working there as well, which gave you the forefront to start your own business today. And that also, from my perspective, means that you've got the academic stature behind building a business and growing it. What would you say is your biggest key takeaway in running a business which is very reactive in the world where you can't plan a lot of things about it, right? So you work a very reactive model, right?
Yeah, I mean, previously, my experience of actually being part of a business was more the day-to-day operations, and that obviously the best way to combat that is just by managing expectation. There is a huge expectation on you as a reactive business to be time efficient, first time fix, those things. You try your best, and again, it's just being transparent. That's one thing that sort of will get you where you need to be. My own experience in running my own business is the back end of the business financially.
Okay.
Books, P&Ls, depreciation, things that I wouldn't be exposed to previously. Now in my own business, I'm obviously able to.
So running your own business, now you're in a situation where you're dealing with emergencies as well, not just in the day-to-day running of the business, but you're dealing with emergencies at the back end of the business as well. Things like cash flow, invoices, people paying you on time, all these things that affect a business, right?
Yeah.
And I know you've got other facilities in place that help you improve your cash flow. So it brings it back to the finance side of things as well. So you've gone to market, not just run a model which is just self-funded. You've actually gone to market and borrowed money as well.
Yeah. I mean, again, the industry is it's not a cheap industry. As you know, you need machines that are north of 250,000, 300,000 pounds to do a certain job. Now you have a choice. You either invest heavily in the right equipment to get the job done, and it pays dividend in the long term, but that is balanced with just running a young business.
And that's also believing in your own business as well. For you to go out and buy an asset worth £300,000 or £400,000, that means you're banking your own business, right?
Absolutely, yeah. But then obviously you're putting your faith in your customers to
it's a double-edged sword, isn't it?
To do their job, and pay you.
But the stuff you've purchased, you've not gone and purchased a £300,000 truck by yourself, have you? You've actually borrowed and leveraged on it.
Yeah. I mean, and again, that's choosing the right equipment. Choosing the right equipment will get you the best deal. Again, you can. Every job's got a ceiling, and you want to be competitive. But ultimately, you want value for money. Your customers need value for money, so you have to balance value for money for them, and then you have to balance your finances to purchase a £500,000 machine, which isn't it's not flex. You don't go to meetings and say, use us, we've got a £500,000 machine.
Yeah.
You've invested in that product.
But then you also understand the ratio of good debt versus bad debt. So you've taken on a big debt on your book of business right now to get the equipment you need, the plant, the machinery, and certain other assets within the business. When you first started off, you've had to borrow money to get it going, right?
Yeah.
So will you say you're adverse to borrowing money or not adverse to borrowing money?
I'm not adverse to borrowing money if it's going to improve the way we operate. I think, again, it's not all about earning money. It's about improving operational efficiency. If there's money to be invested into doing that, then absolutely we'll do that. It's time management for people as well. We've actually invested most of our money into our day-to-day operations of how we structure the business, our computer systems. There's lots. Machinery takes up a lot of cash flow. Obviously, your running costs when you're running HGVs, that comes with high insurance, high running costs, fuel. everything else. We've got equipment that we're using every day. You know, porter reels, towable vacuum trailers. They're not cheap bits of equipment, but a lot of our investment is put back into the people that we have. So
you retain, in terms of you pay a lot of your staff really well, so that you retain good clients that way, or good
I mean,
employees.
They'll probably say differently, but
they'll probably say different. I met a few of them. They probably say different, but they're nice guys. But they're loyal to yourself in that sense as well. So they're remunerated well, and therefore you can kind of take that on board as well. And yes, sometimes it's easier not to borrow because you're paying less on your bottom line, but it's more profit retained. But I believe you're the kind of business that's happily borrowed it, invested back in again, taken liquidity loans when needed, and invested back in with a long-term view, right?
Yeah, and again, that's banked on our customer type. We've got blue chip clients. You know, obviously I can't sit here and tell them they are, because there's probably people watching this. But there's clients that we are confident will be our client for a long time, and naturally you're then more confident to invest.
Because of the back of that, right? Then also comes down to my other point here now, is do you think most businesses underestimate the financial and emotional tolls of emergencies?
Yeah, I think the customer suffers the most, because you know, even if they're end user and it's their emergency, they have to deal with that. 9 times out of 10 in this industry, you're doing the job for somebody else. So you're representing that client, who is your client, who's doing a job for their client. So it starts with with how you react and how you operate your day-to-day business to make sure that everybody in that process
is taken care of, right? Then also comes down to stage where, how do you make sure your clients pay you on time, and what facilities have you put in your business right now to make sure you can release liquidity as opposed to waiting 60, 90 days to get paid on?
So, I mean, listen, every company's got debt. Yeah, so we're obviously, no one pays on 30 days. That's part and parcel of the business. If you do, fantastic. Some do, some don't.
Yeah, some people want you to fail by not paying you on time.
Yeah,
they run that kind of gauntlet where they say we'll pay you in 30, they push that to 60.
Then it's 45.
Then it's 60.
Yeah. So
some companies can't survive that because they haven't got projections and cash flows and invoice financing, a few other bits and pieces to go with it. Yeah. And I know you guys do have a facility and a system in place that helps you. It costs money.
I think as a young business, again, for us, it's we were looking at a business that is coming up to 4 years old. We're aiming for a £7.5 million turnover. That doesn't come without any sort of. We have got no fail safe. Yeah, we have now, but we didn't have a fail safe. Yeah. So when you're operating at that size, naturally your costs are higher. We're working with, obviously, as I say, local authorities that. There is no process for a payment upfront system, a deposit system. That just doesn't happen. No. And when you're coming into an industry which is you're small fish, a very big pond, and you're competing against some of the bigger fish, you're not in a position to say, use us, we're really, really good, but can you pay us 50% up front? That just doesn't happen. But
you have to cash that yourself, right?
Yeah,
that's where good accounting comes into play.
Yeah, and we're very fortunate. Our months, we dissect the month. So every month, obviously, we close a month down. 2 weeks into the following month, roughly, give or take, we sit down and we go through our entire management account, P&L, what's it cost us for training, any abnormal costs, what's popped up, how, if there is a large cost that's popped up through hiring of a vehicle and it's, say, for example, damages, how do we avoid that? Put a process in place.
So as much as you're doing with your clients in a reactive model in terms of fixing their problems, you're running a very reactive model within your own business and constantly monitoring, evaluating. Yeah. And at the same time, understanding that if you were to borrow some money somewhere else and pay, say, 10% interest on it, or an invoice finance or a factoring deal to go with it, it's going to cost you 10%, but means it's all about cash flow, right?
Yeah, and again, we're lucky. Well, so NatWest support us in our facility, which enables us to draw down on anything that we invoice. That's up to us if we use that. But that compared to an overdraft, you're miles apart because an overdraft facility that we would need to sustain our business, God forbid, so something.
And the rates on that would be in the 20s or 30%.
Yeah,
on an overdraft.
You'd be miles out. And
you can sustain an overdraft for a month or two, and then you're going to make yourself bankrupt. Unfortunately, exactly. It's the nature of the business, right? On the overdraft, and I totally agree with you. A lot of small businesses come to us thinking, I just get an overdraft or I get this. Yes, you can. Yeah. But the proper facility to get, like you guys gone out to market, done your research, and understood that an invoice factoring facility or a invoice discounting facility is the one to go with. Yeah. And the reason why, it costs you less. Yeah. You have a facility which is variable, and you choose what invoices to upload on there. Yeah. So if you have a client that you know full well that doesn't pay on time, you factor that invoice.
Yeah, of course. If we got a project that's north of 100,000,
Yeah.
You've got to do your maths. Your profit has to reflect the
cost.
inevitability.
It's the cost of borrowing,
if
right?
it rolls over, then there's a cost there, and that.
So either it's going to be a financial cost,
Yeah.
which people sit there and work out, or it's an emotional cost. Now, for me, when talking to businesses, people like yourselves and other people who've done business with in the past, is what's more important and which costs the most. One will cost you emotionally.
Yeah.
How much sleep do you want to lose over it, and how much stress do you want to bring home?
Yeah.
And it boils down to other aspects of your life as well.
Yeah.
Your wife hears about it, your kids hear about it, your mum, your dad. It just becomes a rippling effect that no one really wants to live.
Yeah, of course.
Or do you just borrow it and then figure out how to pay for it?
Yeah, and again, I think that's a fine line. And naturally, as most young businesses, when they start, they overborrow. They have a fantastic first year, then things start to happen. Yeah, there's lots of, this industry is so unstable.
But it's controlled borrowing. But it's controlled borrowing, though.
Of course,
So
yeah.
you can go to market right now. When you started your business 4 years ago, you could have gone to market and just borrowed everything through the hills, and run a cash flow model where every penny comes in is getting spent again. Or do you kind of tweak certain things here, do a bit more work with the startup you've got, and just rejig the books to make it more value versus growth right now?
Yeah.
So that brings my next point. It's like, is it worth paying up front for quality, or is it worth paying something less to get a cheaper quality over time?
I mean, in terms of an asset, I think you should pay them more up front if you've got the money there to spend it. But again, that's based on
Experience.
and what is it going to be worth.
So someone could tell you, buy this truck because of X, Y, Z. Unless you're educated in the marketplace, it's very, very difficult.
Yeah.
And which is what we come back to. Our point is, when a client comes to us, like you have as well and previously, we won't just give you what you think you need. We'll actually take time to understand why do you need it.
Yeah.
And we've had conversations and sometimes kind of locked heads about it to a certain extent, because in your mind it makes perfect sense. But from a financial and numbers perspective, it doesn't really make sense. So we need to just educate you and you educate us how you guys want to work.
Yeah.
And this is where working with an independent brokerage gives those options. Go to market, look at what else is out there, not just this is the only way of doing it. I don't understand drainage, I don't understand utilities, so I'll speak to an expert. You know exactly what's required to do X, Y, Z. But in terms of funding, there are the traditional methods. You borrow from yourself, you remortgage your house, but then all those come at a risk, and the risk is it's all on you.
Yeah.
You need to leverage the business, and this is what most people I struggle is having these conversations with most clients right now. Is they struggle with that. Why can't they leverage the business, but they'll leverage their personal life? They'll get a car on finance.
Of course. Yeah.
They'll book a holiday on credit.
Everyone looks at you.
There you go. But that's one of those things, right? But then they won't leverage their business.
Yeah.
And the business has to run cash efficient. It's going to be profit all the time.
I guess that's probably down to lack of trust in clients. Then I guess
I wouldn't say it's lack of trust in clients. I reckon it's lack of trust in the business.
Yeah, maybe so.
I'll definitely counter that, and the reason why: if you believe in your business wholeheartedly, you're going to bank it.
You're only as good as your last job.
100%.
And anyone that tells you that otherwise is
no.
Not
but then if you make sure your last job is, if you're working towards that concept where you're only as good as your last job, then you're giving it 100% every single time.
Yeah. I mean, for me, if there was a scenario where there was X amount of cash to be injected into the business, there's things that you would do. You've got to spend money to save money.
Oh, definitely. You've got to speculate to accumulate, right?
Yeah, 100%. But I think there's expansion and there's efficiency. Efficiency with cash and expansion with cash are two different things. Obviously, you've got to guarantee a work stream or a workload if you expand. But if you spend money to save money,
it's like marketing right now. You can spend thousands of pounds a month on marketing, right?
Yeah.
No tangible.
Oh, we've
result.
done it. We've done it. We've spent north of 30,000. But again,
it's not tangible in terms of
what do you class as progress.
And what do you class as the lead coming through, right?
Conversation.
And I think what people need to understand in that concept is it's made your brand more aware.
Yeah.
Not necessarily you got a lead on the back
brand
end.
awareness. If you're going to spend, if in this industry, nobody is going to go on Instagram and find Libra Utility and go, I want them to come around
Definitely.
and offer a culvert clean, because no one's got one.
They know
We're
what
not
it is.
going to go around to Mrs. Fifth's house and unblock her sink, because
That's not your market.
No.
You are not your Pimlico plumbers. That's not your business.
Exactly.
Like you're.
So getting the name out there is great, but it's the audience. It's people on Instagram. It's amazing getting 100 likes on a photo. I mean, we're not actively across any social media. I mean, our LinkedIn posts are very. They're based on statistics. That we won't necessarily post a photo of one of our tankers on a job with a before and after photo of a pump station clean, because I expect my audience to know what that is. I'm not.
No, but you're looking at it from a control perspective as well. Like, as much as your clients are educated, they're coming to you because they know what you can do, and your industry is all word of mouth.
Yeah, of course, and naturally, with us as well, it's finding the right person in the right business. I don't want to go out and have just hundreds of phone calls a week, pointless phone calls. That's not how we work. We don't operate a cold cold calling sales.
No, yours is referrals, but your business is based on referrals, people who know you, and how they.
Well, I want to work with the best clients, and I want the best clients to work with us. Some of these clients that have been around for 20, 30 years, they've tried everything. They've tried everything, and a lot of issues come down to lack of organisation in most businesses, especially with us emergency reactive businesses. I mean, we got a phone call last Tuesday, 4 combination units out on a night shift. That was at 2:00 in the afternoon. Night shift starts at 8. We done all 4 of them. That's how we operate.
No, but that's because you've got systems in place, right?
Yeah.
Not just in the data running of the business.
You have to preempt that phone call.
No, you preempt that phone call, but at the same time, as much as, and I would say, from understanding that, people, when we speak to people about this, you preempted that data running of the business, right? But this happens here, this happens there, these variables happen there, go with it, right? In the same way you manage your books and your finances on the business. I'll bring it back to the finance side of things on here. The same discipline you apply to running your business, you apply that same level of discipline in the back end.
Of course.
So with your accounts team, with your accounts team, your bank manager, your facilities that you've got, are they all serving a purpose? Can they deal with something happening out the norm? Can you fund it through here? If I need to go and do X, Y, Z, do we have the liquidity? Do we have the patience within the books? Can the company sustain this investment? It's the equivalent of saying, does taking a bit more bad debt make the business stink, or will it make you better moving forward? So is that bad debt or good debt?
Yeah, I guess, again, it's like anything. If your company can sustain the debt and it can also grow income, then why not? I mean, for me, especially in our industry, in order to, as I say, the debt would be to save yourself cash flow. Yeah. So if you're gonna go out and if I was to look at the end of the financial year and say, how much work did I sub out? How much work? What was the value of that work to me? What was the value of that work invoiced out? What was the margin? What would the margin been if I replaced subbing that work out with my own driver and my own truck? I look back on that. I can look at that data in our management accounts. I can sit down and look at that data and see if that's worth me doing. That is debt. I'm going to be leveraging more money to put myself into more debt, but it's going to return.
But that's where the nuance of looking at it come into play, where you've understood the logic versus the data.
Yeah, of course. Yeah.
It wasn't just, I've got a gut feeling we need to just borrow more. Yeah. We just need to ride ourselves. So you're not paying more money with bad debt.
You can get tied up. Listen, there's companies out there now, and they'll know who they are. They'll go on LinkedIn and they'll see that somebody, another business, has bought 5, 6, 7, 8, 9, 10, 11 trucks. Yeah, 11. Say for example, the Flexline, the Booker Municipal Flexlines, amazing bits of kit. North of £400,000. So amazing. Somebody will see that and go, "We need one of them."
But why?
And then they'll go in empty gullies with it. That is,
but then it's not getting it's getting equipment and how to use the equipment as well. So it's like having a funding line and understanding how to use that funding line as well.
Yeah.
So anybody can go out to market right now. Anybody can come to us and say, we want to borrow this, this, and this. We'll get your credit line sorted out. But if you don't know how that credit line is going to be used or what benefit it gives your business, there's no point taking it.
You're doing it because you want it. You're doing it because it looks good.
It sounds great.
And when you post that on LinkedIn, look at us. Here we are with our brand new tanker. No one is going to care about that. Because all the clients care about is the fact that you've turned up, you've said you've done what you said you're going to do, you've done it for the price you said it would be. There's no unexpected costs.
Yeah,
they got the paperwork. That is the most important. Your operation efficiencies will outweigh whatever.
But that's where deliverability comes into play, right?
Of course.
Like the same way when you come to us for solutions for your business, we'll give you the solutions up front, we'll work out the numbers, and you know exactly what you're getting yourself in for 2 to 3 to 5 years. This is your capital outlay, this is your outlay in terms of monthly repayments to borrow X, Y, Z, and you can crack on and do this as well, whether it's IT infrastructure or software. There's things that you can grow your business with that cost you a small amount now. It's like we always tell the clients at the same time when I speak to new clients, why would you pay an employee 3 years' wages up front when you can stagger it? The same thing applies to business, things you purchase within your business. Assets, software, even staff. So there's a reason why staff get paid monthly. Why does no one get paid a year up front? Because they need to build value in how they go along.
Of course, yeah.
And this is where an educated mindset comes into play, where someone who understands the numbers, the books, the business, and is not afraid to say, okay, this doesn't make sense, this makes sense, let's tweak it, let's change it and understand it to go with it. And that's what makes an impossible business possible.
Yeah.
And I think that's the difference to go with it, right? And what would you say is more important, cash flow or profit?
As a shareholder and a business owner,
Yep.
naturally profit, because
100%.
with profit, money in the bank, you can start to plan how you use that again to leverage to grow,
Yep.
or do whatever you need to do for the following year. Because we always try and account for the quarter that's about to come. Yeah, but without cash flow, your business ain't no good.
There you go.
So-
it's a yin and yang effect, right?
Yeah.
There's like one's more powerful than the other. It's that classic scenario, isn't it? They say turnover's vanity and profit sanity, right?
And that in our industry it rings
It's
true.
true. I want you to say your industry. I've heard it countless times across the board. The minute some people like to bury their head in the sand, they don't want to know about it.
Yeah.
You know, they don't look at their MI, they don't look at their numbers to go with it. And you guys are very educated in that sense that you're quite fortunate.
We're very lucky. We have a structure, and we have key people who have spent
Yeah.
a lot of time in much bigger, more complex businesses that are able to give us our results.
Yeah, there you go. Like, we've done a podcast previously about MI. And we went into what MI is, management information, how it looks, and why you need to have it as well.
Yeah.
And that's half the battle with most businesses. They think that the most important thing to them is their annual accounts.
Yeah.
Or
That's-
or their bank statement at the end of the month, right?
Yeah.
And that's where we really kind of not fall out, but that's where the disconnect really sits in most places right now. That it's not just about that. That's
if you don't have management information, you cannot categorically say how well your business or how effective your business is.
no, but then some people turn around and say to you, Joe, I've got money in the bank right now, I'm doing really well. So why is that? Why is that a problem?
How do you know how long it's going to last? Because you've got money in the bank, amazing. What's coming down the track? You don't know. There's no without the right accountancy program and without the right people, especially chasing down debt, because that is one of the biggest.
Okay, so that is the point. That's really a really good value point. So the right accountancy software,
Yeah.
like Xero or QuickBooks or whatever you guys are using there, helps you chase down debt.
Yeah, of course.
Tell me a bit more about that. What do you mean by chase down debt?
Well, naturally, any job that you do, you're expecting to get paid on the payment date. That just doesn't happen. Doesn't happen because people just. I mean, sometimes people just don't want to pay you.
Yeah.
Not for any reason that the job isn't. It's just they haven't been paid by a contractor. Therefore, they can't pay you.
They've got their cash flow problems.
Of course, yeah.
And they've got their MI issues.
Of course, and then there's process. Some companies just don't have that process. So your invoice lands on a Tuesday, they don't pay invoices till the Friday.
And then there's a week in
And
arrears for that.
naturally, you've got 4 day. So you've got 3 to 4 day wait time there. So as long as you're getting information that's going to be paid, you can start to plan. But then you've got to keep on top of that. So then you have to limit your exposure. So when you take a new client on, you credit check them. What are they good for? Now, some friends of mine in the same industry will take their first 3 jobs payment up front. Now, I like the idea of that, but I also don't like the idea of that because I've been a consumer and I've also been the contractor. So I look at that as a consumer and go, they're desperate. They can't sustain. Because the cost of doing a job and then what you want to get paid for the job obviously do different things. And you're a business, so you have to earn money.
And then you want to work with people that are successful.
Of course. So
Like,
I don't
you
want
wanna
to
go
go to a big client and say, "Oh yeah, I'd love to do all your work for you. I want to.
But you gotta pay me
give
upfront,
me
right?
everything you've got, and I'll fully commit to giving you whatever you want. But I need the first 3 jobs."
So that boils down to success, right? So do you either fake it till you make it, or do you lose business out of it and sometimes go under, which some industries have done in the past, right? Or do you work out a happy medium? And for you, and you've hit the nail on the head, you go by due diligence, using data. So you're looking to go to the market.
But then those programs, you know what they're like. They paint a picture, but they don't give you the full truth.
No, but it gives you an insight without having that awkward conversation. You can soft check somebody in the background, say, okay, are they good for the money? Yes or no? How is the last 3 months looking? Whether it's credit safe or whether it's Experian or something to go with it. There are tools out there that help you give this red flag. There's so many principal tools out there that support your business. It's just how much information you take on board. How much due diligence do you do on it? Then make your opinion based upon it. And then it boils down to the classic scenario. Is it logic or you gut feeling? And 9 times out of 10, it's your gut feeling, right?
Gut feeling, yeah. But I mean, we use Business Experian. Again, I look at some customers. If we onboard a new customer, I look at it, and they might be medium to low risk. So, but that's based on what? Who is that? Because that presents a picture for the last 2, 3, 4 months. who's to say they haven't got something pending that they just got to get this job done, you're not going to get paid. So
yeah, there's always something in the background, right?
Yeah,
There's always something in the background. Like same thing in your business as well. You could have unexpected costs come through that you haven't planned today. Thus, you're not going to put it into your MI straight away or those books to go with it. So then it boils down to how resilient is your business and how much resilience do you play on people within your organization to get the job done.
I think our main resilience is our client base, because we, like other drainage companies and utility companies, relied on certain clients who were giving small bits of the pie to lots of contractors.
Mm-hmm.
We're relying on them to keep our cash flow going. So one thing we had to do this year was expand our customer base, and I mean that in a way that we would give the mix of work, days, nights. If there's investment that you need to have, you make as a business to educate you or train your staff to do a certain job, that had to be done. That was at the forefront of it. Your business itself, if it needed accreditations or qualifications, then that's the route we went down, and that opened a lot of doors for us. That's just strategic sales.
No, but that's the investment in yourself, though.
Of course,
that's not a monetary or anything along the lines where say, let's go out and buy this piece of equipment. That's self-investment within the business, right?
And you don't want to come unstuck where you onboard a client and they go, "Have you got X, Y, and Z?"
Yeah.
Okay, it's a long process. You have the right people to do that process, but when it comes to getting that order, you need to have everything.
But that all boils down to, it's not just like numbers. It just boils down to understanding the business, having a step-by-step methodical process, right? They're pretty much the same way you manage your books.
Yeah.
It's all methodical. Things happen on a certain day, and you're process-driven. You don't randomly decide that Wednesday's going to be payroll, and next week we make it Friday.
Yeah, no.
It's all system-wise, right?
Yeah, and also your flexibility doesn't just come in your staff on the road. It starts in the office. Yeah, so as an example, every member who spends the majority of the time in the office, whether that be in operations or they will have another skill that they can do to stop any problems arising. So, for example, naturally, any business, you're not going to have two people in the same department go off. Yeah, so you're not going to have your whole accounts off for 2 weeks, because that's just not
not viable. No, but then you've invested in the right people for the right job.
So they manage that, and we got our departments. Our business is departmentalized, and it's managed properly. There's certain systems in place that stop things like that happening. How often do you chase money down and they go, "Oh, sorry, the accounts are on holiday"? Like, what's that?
So then it boils down to having a planned, better system is how the philosophy of growing a business happens from there.
Yeah.
So you planned it, you sustained it, and you've got the growth mentality. Yeah. You're not stagnant where you are. So you're trying to go day in, day out, get better and better by it.
Yeah, and the client shouldn't suffer from your poor management.
You've got to build it, you've got to tweak it, you've got to change it, right, to go with it.
The computer system plays a huge part in that, which is where the investment for us was last year, as you know, because you set it up.
We help you support you in the process on that one. Yeah, definitely. So that changed the way you work. So now that gave you a strategic viewpoint on IT. And some people look at a massive IT investment thinking, right, I'm doing it on an Excel spreadsheet, I'm doing on this.
I came from a family business, as you know, that was all paper. So you take, you raise a job, you had to physically get a bit of paper, write the details on it. I mean, that come from an age where the business started 30 years prior to.
No, but then there's evolution as well, right?
Yeah, of course, yeah.
So
and it's taking that jump. It's you get visibility. Like you've got it here with the question in front of you. That's visibility. You know what's on that paper. It takes a lot as a business to no longer rely on physically seeing a bit of paper, especially when you've grown from a one-man band.
Yeah. So one-man band would always look at things like, this is the easiest option for me. I can do this. It's the best option for that. The reason why, because it works both cash, it works as a cost point at the end of the day.
Yeah.
And also, you've got to understand is 30 years ago, a traditional way to fund a business is very different how you fund a business today.
Yeah, of course, yeah.
You can't go out to get the guaranteed growth scheme. You can't go out and get a business loan based on your projected turnovers.
No.
Traditionally, it was you leverage your own house and you start a business. Now, you can put your house up as a PG, personal guarantee at the end of the day, not necessarily call upon it, but you can leverage that 5 or 6 times somewhere else. You can buy a truck worth £500,000, or you can buy a property. You can invest elsewhere. There's other ways to leverage the same debt you've got.
Yeah, of course.
You can leverage it by invoice financing and factoring and borrowing money out. Business liquidity loans, for example. These things weren't available traditionally. It was either you get a business overdraft, and that's about it. And
I will say that poor business management does promote debt, because it's very easy, to go and finance your VAT bill. But if your business isn't maintaining its
But there's a reason. But there are businesses out there we work with that need to finance their VAT bill because, unfortunately, they've utilised that cash flow somewhere else, and now instead of having a 200
management accounts, that shouldn't happen.
It shouldn't happen. But ultimately, the challenge we've come across on that front is that the VAT bill, the money comes in every single month from the VAT. Most businesses have 2 or 3 separate bank accounts. They'll have one where their debt that needs to be paid off sits in a bank account, so you don't really spend it. And some people keep it because either their clients aren't paying on time, or they have other systems in place to get that money back out again. So they'll fund.
I get if the client's not paying and you're £200,000-300,000 in debt, and that obviously that
the VAT bill comes into it, right?
Of course, but I mean, again, for me, I would ask questions of our business, especially if I looked at the management accounts. I would look at it and say, how have we got to this stage? Because you can't be having a healthy profit in your business if you can't cover your VAT.
At the same time, if you were to outsource and leverage your VAT bill, and that money you would have paid the VAT man up front on.
But it only kicks it down the road.
It kicks it down the road.
3 months' time, you're doing it again.
No, but then you're spreading it over, right? So imagine you've got a 60 grand VAT bill. So instead of paying 60 grand up front in January, you could pay 20, 20, 20.
Yeah.
It's the same project. But that 40 grand you've retained, yes, you're paying it back slowly. Could you reinvest that 40 grand within your business? And some clients we work with do that. They take that 40 grand thinking, right, I've got this cash flow up front.
Yeah.
I'm paying to borrow it. It's going to cost me 10% argument's sake, right? So I borrowed 60, I'm going to pay back 66.
Yeah.
Whatever, argument's sake, right? So yes, you're paying back 66, so you're paying 10% on it. But now that money I've got up front, can I A, take on another client? Can I B, take on another member of staff? Can I leverage that money elsewhere as opposed to just giving it to HMRC? There's a reason why.
Yeah, I guess that probably would work for some.
So I'm not saying it works for you.
As a business owner, I would just be
no. For you, it doesn't sit in your merits, right?
Yeah.
But as a business owner, you also enjoy invoice financing. For some business, they refuse to do that.
Yeah.
Because for them, it doesn't make sense to pay 10% on an invoice.
Yeah, well, ours is a drawdown facility, but it's a fixed percent. I mean, the deal we've got, and obviously I can't disclose what it is in case it's not the same for everyone else. But the deal that we've got,
no,
I mean, we're again fortunate enough to be surrounded by some financially amazing people.
You've got the right advice, but it costs you, right?
But I got the right advice, and I got 4 different opinions on it, and they were like, "This is whatever that is not normal. Take it."
Yes, we've had that conversation as well because it was so great. But at the same time, you've had an exception to the norm, right? Let's look at it from a macro level, a global perspective. Most people either go down the invoice financing or that. There's reasons why people choose each facility.
Yeah.
And what I'm trying to say is that it may not make sense for you today, but it may make sense previously or in the future. There may be an element, but it's just being open to those choices and understanding, okay, 1 month, have I got my management information wrong? Or something anomaly crept in that we haven't planned? Can we go and fund this right now? And yes, something like VAT funding, we can fund within 3 working days. So something that's reactive, that's you going out and doing your reactive jobs. We are reactive in this space as well.
Yeah, of course.
To fix it and kind of support that struggle. And that's the kind of point we're trying to come across, is that it's not always about doing the same thing over and over again. It's how can we change it slightly to get a different result?
Yeah.
To give you, the outcome's the same. You guys get paid. But it's how you get
breathing space.
There you go. That's what we do. And ultimately, you hit the nail on the head. Exactly what we do here. We provide clients breathing space.
Yeah.
It's not a permanent solution. I would never say to a client that borrowing this money here and doing this is going to give you a permanent fix. No, like you said, you're kind of deferring the problem down the line, but you need to cash for yourself out of it.
Yeah, of course.
The problem's still there. It's not going to disappear. The problem's not going to disappear. It's how can you cash flow yourself out of it. So I think that's the most critical thing with any business. It's all about the cash flow and how you kind of get away from it on there. Any further questions that you're in today?
I bother you enough during the week, don't I?
That's fine, mate. That's what we're here for. And that's the thing. But that's the kind of relationship we have, right?
Yeah.
Where if a client can't reach out to us and we can't reach out to the client, then you think to yourself, are you really in the business with the right person?
Yeah.
As much as your clients nag you, you're a client of ours and you're more than welcome to do so, which we're happy to take on board. And every time we haven't got the answer, we'll tell you we haven't got the answer, and we'll come back to you on that front anyway. But it also brings us to an end to our today's conversation. Joe, thank you very much for coming on today. Really appreciate it. And I hope it's been an insight on how we work and what we do here. And I hope the viewers really enjoy understanding and seeing what a resilient utility company actually does in the background as well. Always a pleasure. Thank you.
Very much.
Until the next one.
Thank
Cheers,
you.
mate. Thank you.